Hey everyone, welcome back to Corporate Decoder. We're about to dive into a filing that makes you wonder if this company is on a rocket ship to the moon or about to experience a gravity malfunction. Seriously, the situation is that electrifying. Before we start, if you like getting the unfiltered truth from corporate filings, make sure to hit that subscribe button. And for deeper discussions and early access to our analysis, join our Discord community. The link is in the description below. Today we are looking at Actelis Networks Incorporated's most recent filing. It is a Form 8K, which usually means something pretty important happened. And in this case, it looks like a big one. This is Actelis Networks Incorporated, a company that focuses on, well, we'll get to that. But what is really grabbing our attention is what Nasdaq, that is the Nasdaq Stock Exchange, is telling them. On the 4th of February of this year, Actelis Networks Incorporated received a letter from Nasdaq. And this letter isn't exactly a pat on the back. It is a notice that Nasdaq is planning to kick them off the Nasdaq capital market. That is a pretty serious blow for any publicly traded company. The reason they're getting the boot, or at least facing the threat of it, is because their stock price has been too low for too long. Stock exchanges like Nasdaq have rules to make sure companies stay healthy, and their stock isn't just collecting dust or trading for pennies. Specifically, Nasdaq says Actelis Networks Incorporated's common stock has failed to maintain a minimum bid price of $1 per S-share for 30 consecutive business days. That is a violation of a pretty key rule for being listed on the exchange. Imagine trying to buy a coffee for less than $1 consistently for over a month. That's kind of what's happening with their stock. Now, usually companies get some breathing room, a chance to fix the problem, often around 180 days. But here is a twist. Nasdaq is saying Actelis Networks Incorporated isn't even getting that grace period. Why? Because they did something called a reverse stock split very recently. They did a 1-for-10 reverse stock split back in November of last year. So, instead of giving them more time, Nasdaq feels like they're subject to immediate delisting. A reverse stock split is basically a move where a company reduces the number of its outstanding shares, which often boosts the share price, but doing it and still not meeting the minimum price requirement, and so soon after is a big red flag for Nasdaq. It essentially tells them that the company's core problems haven't been solved, and the stock price isn't recovering naturally. Their common stock, which is supposed to represent ownership in the company, is what is in trouble. This means their shares are currently traded on the Nasdaq capital market, a part of the Nasdaq exchange. Getting delisted means they'd likely have to move to an over-the-counter market, which is generally seen as a less prestigious and less liquid place to trade stocks. This can make it harder for investors to buy and sell shares, and can significantly hurt the company's reputation and ability to raise money in the future. The report is signed by Tuvia Barlov, the Chief Executive Officer. This tells us that the leadership is aware of the situation and is taking action, or at least planning to by requesting a hearing. As a company, Actelis Networks Incorporated is in the business of providing networking solutions, often for more complex enterprise or service provider environments. They aim to help businesses manage and optimize their data traffic and network performance. It's worth noting that Actelis Networks Incorporated is identifying itself as an emerging growth company. This means they can take advantage of certain regulatory accommodations, but it also often implies they are a younger or less established business, which can come with its own set of challenges and risks. The report itself is dated the 6th of February, just 2 days after receiving the notice from Nasdaq. This quick response shows they are treating this notice with the seriousness it deserves. So, what does this mean for Actelis Networks Incorporated? Well, the immediate consequence is that they are actively fighting to stay on Nasdaq. They intend to request a hearing before an independent Nasdaq hearings panel. This hearing is their chance to explain why they believe they should remain listed, or what steps they are taking to get back into compliance. A hearing request typically puts a hold on the delisting process until a decision is made, so they have bought themselves some time, but the clock is ticking. The core issue is the stock price. Failing to maintain the minimum bid price suggests investors aren't valuing the company highly enough, or perhaps there are underlying concerns about its future prospects. The fact that they had to resort to a reverse stock split already, and that it didn't solve the problem, makes this situation particularly tricky. It might mean that the company's intrinsic value as perceived by the market is genuinely below that $1 threshold, and no amount of financial engineering can mask that for long. Now, looking at the broader picture, what could be behind this? Companies often face delisting warnings when their financial performance is weak. They are losing market share. or there are significant concerns about their business model. For Actelis Networks Incorporated, this could mean revenues aren't growing, costs are too high, or their technology isn't as competitive as they hoped against rivals. The networking space is also very dynamic, with constant innovation and pressure from larger players. If they do get delisted, they'll likely end up on what is called the over-the-counter or OTC market. This is like moving from the main highway to a small country road. Trading volume usually drops significantly, making it harder for investors to buy or sell their shares without affecting the price. It also makes it much harder to raise new capital, which could be crucial for a growing tech company. The story here from our perspective at Corporate Decoder is about a company struggling to meet basic listing requirements for a major stock exchange. While they might be able to explain their situation to the Nasdaq panel, the underlying problem of a low stock price signals a deeper concern about investor confidence and the company's financial health. They are essentially being told by the market and the exchange that their current valuation isn't sustainable for a listing on a platform like Nasdaq. Ultimately, Actelis Networks Incorporated is at a critical juncture. They need to convince Nasdaq that they have a clear path to recovery, or that the current situation is temporary and manageable. The success of their hearing will depend heavily on the strength of their business plan and their ability to articulate a credible strategy to regain compliance. So, what is my take on this? Honestly, it is a pretty grim picture for Actelis Networks Incorporated right now. Being delisted from a major exchange is a serious blow, and the fact that they had to do a reverse stock split recently and it didn't fix the problem is a strong indicator that the market's confidence in the company's valuation is very low. It suggests that the underlying business might be facing significant challenges that a simple stock price adjustment cannot fix. The key risk for them is that if they are delisted, their ability to attract investment and grow will be severely hampered. The opportunity, if you can call it that, lies in this hearing. If they can present a compelling case and a solid turnaround plan, they might just scrape by. But based on this 8K, the deck looks heavily stacked against them. Alright, that is our breakdown of Actelis Networks Incorporated's latest filing. What is your take on their situation? Do you think they will manage to stay on Nasdaq, or is this the beginning of the end for their listing? Drop your thoughts in the comments. If this deep dive into corporate filings was valuable, hitting that like button really helps us out, and subscribe for more unfiltered business insights. And don't forget to check out the Discord link in the description for more exclusive content and discussions. Thanks for watching, and we'll see you in the next one.